Hello everyone. In this video, I will be sharing a strategy that I believe will be very useful for you. As we work on more strategies together in each video, your trading experience and strategy knowledge will expand. If you are a new subscriber to our channel, don't forget to watch the different strategies I have shared before, as different strategies can bring more profits for each trader depending on their risk management. In today's video, we will be using two popular indicators in our strategy. First, I will bring up these indicators and their settings on the screen. Before we begin, my only request is for you to click the like button and subscribe to the channel. The Halftrend indicator is a technical analysis tool used to identify trends in price movements. It consists of a moving average line and a volatility-based band that fluctuates around the moving average line. The band is colored differently, and the trend is up or down, making it easier for traders to identify the direction of the trend. The Halftrend indicator can be useful for identifying trend reversals, as well as for determining entry and exit points. When the price crosses above the upper band, it indicates a bullish trend, and when the price crosses below the lower band, it indicates a bearish trend. The Relative Strength Index RSI is a momentum oscillator that measures the speed and change of price movements. It is one of the most popular technical indicators and is used to identify overbought and oversold conditions in an asset. The RSI indicator ranges from 0 to 100 and is calculated by comparing the average gains and losses over a specified time period. When the RSI is above 70, it indicates that the asset is overbought and may be due for a price correction. Conversely, when the RSI is below 30, it indicates that the asset is oversold and may be due for a price increase. We also learned about the characteristics of our indicators. Now we can move on to our trading rules. For short position, Rule 1. RSI blue line must first rise above 70 and then fall below 70. Rule 2. Second, it must cross both the orange EMA line and the 50 value downward. Rule 3. The Halftrend indicator should show red sell arrow above a red candle. The trade is entered at the close of this candle. The risk and reward ratio is 1 to 2. Another short position example. As you can see, the RSI line went above 70 and turned down again. And here it crossed both the orange EMA line and also 50 down. We are now waiting for the red sell arrow for final confirmation from the Halftrend indicator. And for final confirmation, the sell arrow appeared a candle later. We enter the trade with the close of this candle. Our target is twice the risk ratio. Now let's look at an example of a long position. Our rules for the long position are basically the same. We'll just reverse the numeric values. Rule 1. RSI blue line must go below 20 and then rise above it. Rule 2. The RSI line must cross the EMA line and 50 upwards. And Rule 3. The Halftrend indicator should show blue by arrow. Our target is twice our risk. Let's get into the process. I think you have learned the trading rules very clearly. If you have any questions, write in the comment section. I will gladly try to help. Now I won't make the video too long by showing a few more examples. As you can see, this trade returned just as it was about to hit the target, and the trade closed with a loss. Please note, there is absolutely no such thing as 100% success when trading financial assets. In this video, I shared a strategy that I did a long time backtesting and saw a 76% success rate. Of course, this rate may increase or decrease a little in every market condition. If you follow the rules of this strategy in a disciplined way, you can increase your capital